Faraz Shaukat Ali.
And a very good morning to you. This is Newsline, live from the Newsfirst studios in Dawson Street in Colombo, and broadcasting on TV1, which is, of course, a proud member of the Capital Maharaja Group. And this morning, we're going to talk about something that appears to have been forgotten. Amidst all the corruption and all the controversies and the strikes and the protests, we seem to have forgotten that there's an important component of our economy, the capital market, which seems to have gone into some sort of retirement, or so it seems. To talk about this and a bit more is the former Director General of the Securities Exchange Commission of Sri Lanka, Mr. Malik Kada. Very good morning to you.
Good morning, Faraz.
And welcome home. You have some link to the station, don't you? Thank you for starting the station all those years ago. But, Mr. Kada, what I'd really like to say is, what's happening to our market, our capital market? We have information that there's a new act, the draft of a new act, the SEC Act is out, and many contentious parts of it. But what I want to ask you is it necessary to have all this market sophistication and so on? But where's the market? What's happening?
Right, that's a very good question to start off with, Faraz. Faraz, as you know, the capital markets of Sri Lanka started in 1987 with the creation of the SEC with the Act in 1987. We have come a good 30 years with the old SEC Act.
Yeah.
And, well, of course, it's high time that there are changes being brought to that in line with the new developments that is taking place around
so some of these changes are necessary.
Some of the changes are necessary, no doubt about it, right? But the question here is, for us, as you say, we are bringing in a fair amount of market sophistication with the new act coming into being. Now, to do that, we have an extremely tiny market, a market that is hardly seen. We need to have, firstly, efforts being brought to take the market to another level. In fact, I have got a couple of details here on the world markets.
Right.
Right? We're looking at the New York Stock Exchange. It has $22 trillion in market cap.
Right.
Then we have the NASDAQ, which is about another 8 trillion. So the two put together, right, they basically control the world capital markets, right?
Yeah.
But you're looking at Hong Kong, which is about 2 trillion. You look at India, which has about 2 trillion US dollars. You see Singapore, you see Australia, you see Japan at about 8. But what is our market size? Our market size is just 2 trillion Sri Lankan rupees. That is about 1.5 billion US dollars. Now,
all these other places are big economies. Ours is a minuscule economy in comparison.
Yeah, the thing is this, we need to move to that level. Now look at Singapore, right? They're a smaller country than us. Look at New Zealand, right? But they have bought these market sophistication to take the market to the next level. What plans do we have to take the market? Now that is the whole idea. As speaking to you just before this the program, we have hardly any listings.
That's right, I was about to ask you, what about the listings? How many new companies have listed?
Well, hardly any during the last 3 years. And then...
But there was a whole spate of it before.
Is before that. But is it correct for us to start tightening the screws on the listed on the companies that are about to get listed? For us, we're talking about listings, we need to be mindful. Why does a company want to come to the Colombo Stock Exchange to get listed? It basically has to make economic sense to them.
But equally, Mr. Khadak, we must be mindful that there was a select band of people who engaged in what has become famously known as pumping and dumping. And there have been companies that had no value, no real par value, but their shares were being traded at several times. There was some shares that were worth 100 rupees that ended up being traded at over 1,000 and so on. So, and then the public is what who took the brunt. As usual, it's usually the media or the public. And in this case, they couldn't blame it on the media, so it was the public who actually took the hit. So isn't it necessary to be mindful that there may be attempts to do all that, and so the rules need to be tight so that when a company is listed, there is some real value?
For us, you have a point, no doubt about it, right? But as indicated by you, I mean, those figures you mentioned, the market lost confidence.
Yeah.
There was an element of integrity which was also lost.
Yeah.
So in fact, you ask the investor to come into the market, right, they were frightened. Okay? Having said that, all these rules and regulations need to be tightened. I think the new act addresses all those things. One of the fundamental things about capital markets which people fail to realize is that capital markets are necessarily driven by risk. Risk is inherent in capital markets.
But is risk...
Some argue that it's a job of the regulator to take the risk out of the market. Some argue, right?
Yeah.
The regulator must sit there and take the risk out of the market. For us, if that happens, it's not going to be a capital market. Risk is inherent. It will be a fixed income market.
Right.
So people will have to understand that there is a risk.
Yes, there
right,
has
in the
to
market,
be, yeah.
right? And that is why capital markets are governed by what you call disclosure-based regulation. Disclosure. So disclosures are key, and you need to have, unfortunately, right? People will criticize me for saying this. You need to have people that are literate in capital markets, right?
Yeah.
To get into the market.
Right.
Well, for those people who are not literate,
yeah.
or we can say unsophisticated investors,
yeah.
there is an avenue, right, to go through, to enter the market through unit trusts.
Yeah.
Right? That avenue is available.
Yeah.
So we need to have literate
yeah.
investors coming into the market and then understand what these disclosures are.
But then the SEC has done something towards that literate market by opening offices regionally and promoting.
Yes. For us, this cannot happen tomorrow.
Yeah.
US, it took from 1932, it took almost, right, close to 100 years to get to this level of literacy. And still you get about 15 to 20% of the people in the market.
Yeah.
Right? It doesn't mean that we are going to take 100 years. It will take a little while, right? Maybe in the next 20, 30 years. But I think the stock exchange, the SEC and the market participants should create that element of awareness. And when you have literate participants, right, sophisticated participants in the market should be driven the way it should be driven. It will not, you will not have scenarios where a 10 rupee share will be sold at 1,000 rupees. No, people are not going to be that gullible.
Indeed.
Right? So that is why you need to have, you need people to understand what this disclosure-based regulation is. For instance, a company comes up, right, for a listing, right? I think it is the job of the regulator to tell them, you disclose as much as possible all information, not as much as possible, all information pertaining to that security to the public, to the potential investor. You're not going to say that this company is good or bad. You're not going to say, right? The regulator and all the stock exchange.
But that's not their
No, it's not their thing. So the investor will have to make an informed investment decision.
Indeed. But don't you think that they should also carry statutory warnings like they do on a packet of cigarettes, in which it says, you know, smoking is dangerous to your health. So in the same context, cannot somebody, I suppose SEC, and maybe the banking ombudsman on the other side, an insurance person, ombudsman maybe, why can't they carry statutory warnings? Your home is at risk if you do not make payment. Your investment in the Colombo Stock Exchange may go up as well as down. you stand the risk of losing your security. Can't that be not in, in font that is one font? It should be in about 12 point, so that it's there.
I think that's a very valid point in terms of market development. I think that has been done in India, even on television programs,
right,
where funds have been advertised, right?
Yeah.
They quickly run through a small paragraph,
yeah,
right, for the protection of investors.
Yes, but sometimes in Britain, I find that, they say it so loud, so quickly,
yeah,
that you don't really know what on earth they're saying. It's a bit like
money.
people...
Well, it costs money.
Well, yes, but it's a bit like... have you ever tried calling one of these, let's say a hotel, trying to make a reservation or something, and all I hear is something, and good morning. Yeah. And I say, what? Who? So they don't talk clearly. And so what I'm saying is, they run it so fast and say, your home's at risk if you don't make up payments. And they say it much quicker than I've said that. And so that's a bit pointless. But I think, don't you think that the public must be made aware?
Yeah, that's a huge task. That's not an easy task. Having said that, for us, I must also tell you that in this risk business, however much you tell people about this risk, until they are beaten very hard, right, they will not understand what risk is.
Okay.
You have to get hit. It is then that you understand what risk is, unfortunately.
Right.
Right.
So you have to learn the hard way.
You have to learn the hard way.
Right.
You have to learn the hard way.
So therefore, isn't it therefore essential that when a company is coming in for a listing, that the SEC ensures that everything relevant should be disclosed and there's a robust investigative
Precisely.
process.
That's why you get a thick book called the prospectus,
right,
giving all the information. How many people read this book?
But then again, I hear what you say, but now that you mention it about prospectus and so on, I know, because when I was writing about these things, that there was a company that went in for a listing and attracted quite a bit of money from the public, and all they've got left now, this investor in that listing, is a metal board which is sort of all cockeyed and crooked and rusted and about to fall into the ground, and it's probably now done so because his property is on the side of the beach. So, they collect money, but there's no implementation. So where does a member of the public stand in a case like that?
Firstly, for us, when, for instance, this particular IPO came into the market, right, I mean, there were the board of directors there, right, the investors should have taken a cue on this to see whether these guys are genuine. Secondly, I think the SEC also has a responsibility. I think I could fathom what exactly you're trying to come out with. But there's some action being taken on these guys. But there again, this action is not going to be completed tomorrow.
But that's the problem. It's a bit like the central bank bond matter.
So that's the risk the investor has to take, right? I mean, if you're coming into the market tomorrow, you must understand that if there's a problem, it's not going to get sorted the day after.
Yes, but then don't you think that we need enough regulations to temper the legitimate expectation of a new entrant to the market of ending up like Danica Pereira or the other Pereira or the other Pereira? It's a bit like successful investors in the market are, you can't blame it, but people follow them. And so a newcomer is also wide-eyed and thinking, hey, I can do this. So whilst he may be able to, don't you think that back to this thing about the listings, make sure that the companies that are trading have got some core value, disclosed everything that needs to be, not wait for a noisy newspaper to make a revelation on a Sunday and for Monday to scurry along to the SEC and put a filing in that, oh, actually this land is subject to a court case and it may wipe out all your investment. Isn't that what shouldn't happen? But therefore, if you have proper companies all right at the beginning, if they're all properly investigated before they start trading, at least then you have some chance.
Yeah, so that's what I think. I think it's the job of the regulator, right, the stock exchange of the SEC, more of the stock exchange, to see that all material information pertaining to the company is disclosed.
Right. And also, I'm told...
And also, for us, in this scenario, you see, we are looking at a 12 to 15% interest regime. Right?
Right.
Risk-free investment regime.
Yeah.
Right? And with a scenario like that, right, it is very unlikely that you can get basically people to come into the market to invest at this stage, because you're getting a risk-free return on this side. Right? Why do you need to take a risk and come into the market? Right? That doesn't mean that you should not come into the market, but you can see the comparison.
Now we have probably an investor who's, I don't know who it is, but it says, sir, local investors' dilemma. 30 AGMs deliberately held on one day. Who should regulate that?
Well, I don't think it's the SEC.
How can you control that?
Yeah, you cannot, because the whole 31st. For instance, if you have 1,000 companies, right, we'll have to then space it out and have it at 12 o'clock in the night, some of the AGMs, right? So I don't think it's the job of the regulator or the stock exchange. But we could tell the companies to be mindful, right, of this scenario.
Right. Right. I see. Well, there you are. That was a comment from Ravi. Now then, having heard comments about the proposed new SEC Act, apparently they are going to have something called a qualification criteria to serve on a pre-listed company. Now, what's all that got to do?
Well, from the reading of the section, I think 83 of the draft Act, it means that the SEC and the stock exchange will come with some kind of a qualification criteria for directors of listed companies and for the chief executive officer.
So it sounds that this is getting more and more bureaucratic red tape here. And also, you see, I know that there are lots of very key and high-profile men who are serving on the boards of listed companies, some of them driving them in senior levels. I'm talking about chairman, CEO, that kind of level, where they may not have a degree, for example. I know that the Supreme Court ordered some years ago they gave a criteria as to who should serve on the board of Sri Lanka Insurance. But that was one thing, and it is a huge fund there, and you probably need experienced people there. But, I mean, that's different. In this scenario, isn't there a danger that entrepreneurs might be put off by going for a listing?
Yeah, you have a point. You certainly have a point. But this is a draft act that has been put for comments.
Of course.
So those comments are, I think, certainly most welcome. It will be welcomed by the SEC. Having said that, I must also say, bringing in provisions like this, you're driving the market towards a merit-based regulation.
Right.
Okay. So ideally, this would say that maybe somewhere down the line they will specify a qualification, which means, quite rightly you say, entrepreneurs will be, the market will not be for entrepreneurs.
One Sir Richard Branson might not be able to serve on any of the PLCs.
That's right, on the CP. So these are very valid comments for the SEC to take note of, because from my point of view, right, it is disclosures. If the company basically would disclose that these are the directors, these are their qualifications, they don't need to have. It is for the investor to make a call whether they are going to invest in that company or not. Right? We need not say that they should have this qualification. So I think that there are some countries who adopt these things, right? Moving to rule-based regulation rather than principle-based regulation. Right, so this, I think, is something the SEC will need to seriously look at.
From a political point of view, the next thing is that the people may want then, in that case, to have a qualification criteria for members of parliament. All 225 of them.
But I think that criteria is there. Fortunately or unfortunately, our people vote with that criteria.
They vote with that criteria because the parties nominate from one little box, time and time, and year, until death does them apart. So if you're not selected if you're not nominated by a party, the chances are you're dead.
Yeah. No, the thing is this for us. Now, for instance, list, you get 20 people on a list.
Yeah.
Of that, at least 10 people, right, have this unwritten qualification criteria in that.
Right.
Our voters,
Yeah.
right, then would decide whom they would basically elect. So they decide on the bottom part. So there's nothing which you and I can do. That is democracy.
That's democracy. It needs to be fine-tuned a little bit. But talk about this market that we have, where they're trying to bring market sophistication in, and so the question was, do we actually have a market? So we spoke about listing, but what of volumes? What are trading volumes like at the moment?
Now, trading volumes also basically have dipped to about, even I think yesterday the volumes were about 400 million rupees. The pie is not big enough for 29 brokers and the stock exchange. I mean, the costs are very high, so the volumes will...
How many do you expect? Do you expect any of these to close down? Or are they losing, but they are part of a large operation, so it's been subsidized?
They are. I gather most of these companies might be bleeding. Right? I think it's not sufficient enough for them to make money in this environment. Should they all... In an environment like this,
yeah,
there has to be proactiveness from the government as well. And during the heydays of the market,
yeah,
these brokers, these market participants contributed towards the development of the market.
Mm-hmm.
So you must also, I think, give them an opportunity to put their license in a shelf.
Mm-hmm.
And if there are 30 brokers, you give them the opportunity, at least 15 of them would want to put them on the shelf. Other countries provide that. And it is good for the market because then you have active market participants. Now here you have extremely cash-strapped market participants.
On that note, we're going in for a short break. Don't go away. After all, this is Newsline.
Newsfirst, Newsline with Faraz Shaukut Ali.